Hello, ladies and gentlemen. It's a modern investing show on Pod TV. My name is Sasha Star, and today our guests are Dr. Milan Sombrak. Welcome to the show.
Delighted to be here. Thank you for inviting me.
And also we have Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thank you, Sasha. Delighted to be here.
Okay, and we have also the person who is joining our show for the first time, hopefully not the last one, is Charlie Bell. Welcome to the show, Charles.
Thank you so much. I'm Milan. Hi, James.
Hi.
Great to have you. Let's start, especially for you, Charles, specifically, the right rule-based investing. Everything else is wrong. Milan, please introduce us to the right way of investing.
Well, first of all, I'll say, Sasha, that when you are right, I agree with you, but when you're wrong, I cannot. So now, there are two types of investments. One is rules-based investing, which is always right, and the other one is judgment-based investing, which is wrong much of the time. So the rules are, there are 6 of them. Number 1 is save. Without saving, the other 5 don't work. And we can talk about saving for quite a bit, but there's no need for that. Save as early as possible. Number 2 is do it yourself. Wall Street wants us to think that what they do is brain surgery and rocket science, and it isn't. Investing yourself is very simple. All you have to do is buy an exchange-traded which tracks the American economy as represented by SPY. Happens to be the best exchange-traded fund. There are half a dozen or so. SPY, for a number of reasons, is the best. And so that's the third rule. The fourth is buy and hold. Don't trade. Buy and hold. And the fifth is adjust to your asset allocation when buy and holding is thrown off by market movement. So maintain an asset allocation of roughly, say, 50-50. 50% in stocks, 50% in cash or near cash. It can be 60-40, 55-45, 45-55, doesn't matter. The important thing is to have a lot of cash all the time. And number 6 is avoid complexity. If you cannot explain an investment to a 10-year-old, don't get into it. So those are the rules, and they're always right. Judgment is wrong much of the time. So avoid picking stocks, because when you buy a stock, you're buying from somebody who's selling it. If the stock goes up, the buyer is right, the seller is wrong. If the stock drops, the buyer is wrong, the seller is right. Would you drive a car knowing that there's a 50% chance of an accident? You got a 50% chance of being wrong if you are picking stocks. So those are the rules, and that is judgment-based investing, rules-based investing, and that's all that's to it. It's as boring as it is effective.
I like it.
Yes, Charles. So now you got the wisdom
Right.
of investing.
Sorry?
Charles, now congratulations, you got the wisdom of investing.
I'm all set. All right, is that it? Are we done?
It works and it makes money. Not much, not a lot of money. Don't think that you will make a killing with this type.
That's enough for a lot of people.
Sasha, hold it. If you start early enough, you will be able to enter retirement and maintain the same lifestyle that you had all along. So now, Charles Bell, tell us about yourself.
Well, I'm a member of the documentary film community. I come from a blue chip old Toronto family. So my grandfather was the chairman of the TS Toronto Stock Exchange in the 60s. He started Richardson Green Shields for Jimmy Richardson in 1946 or 1947 in Ontario, which eventually became Dominion, which eventually became RBC Capital Markets. I'm fortunate to participate in content creation for one of the big 5 banks. I won't say which, but the CEO, the eldest of which we interviewed, remembered my grandfather the last time we were there, which was really something. So I'm passionate about prosperity for the country. I'm passionate about creating an atmosphere that's positive for investment for Canada. I do a lot of advocacy on that front. I carry the belief that we've been on the losing side of the neoliberal revolution for about 10 to 15 years in Canada, and that our our prosperity and our productivity is a lot lower than even measurement would suggest, in a variety of ways, especially when weighed against what current productivity really looks like in the digital economy. So I'm on Twitter. I'm on a variety of different forums, threads, as Scott C. Bell. Charles is actually my middle name, but I like it for this kind of thing. And that's me. I'm also investing my own capital, not a huge amount, but I do want to be careful about it. And I'm glad to be here. Thank you.
Excellent.
Sasha, congratulations, Sasha, for inviting Charles.
Well, I just got lucky. Now,
See that at the end of the hour.
Lucky is better than good, though.
okay, now we have minority representative of United States friends, Jim Ead Foundations. Please tell us about your style of investing and how you're doing that.
Well, sure, Sasha. You know, and I'm from the United States, but I really need to say I'm from California. I grew up in New England, but I moved out to California for work.
And, Jim, are you aware that in Denmark they are now raising funds to make an offer to buy California from?
That's interesting.
Yeah,
I did not know that.
Yeah, all they're raising now from.
Turnabout is fair play.
For $5.
So maybe U.S. will buy Greenland from Denmark, and Denmark will buy California from the United States. We'll see how it works.
And Mexico might pitch in, one side California.
And guess what? The winner will buy Canada, right?
Yeah. Or just take it.
My investment strategy is fairly good. You know, normally Wednesdays we think are good for stocks, and I'm not all green today, but I like to be green. But I believe in buying what you know, and sticking with what you know. In terms of technology is what I've been focusing on, and what I've been really focusing on. Yeah, it's mostly green, but a little red in there. And the technology sector has been mostly affected by AI in the past year or two, a little bit more. But the stocks that I've been buying and holding, well, NVIDIA and Marvell in particular. NVIDIA I have bought and sold, and bought again when they split. And what I do is track the sector and then analyze the companies that I think are best suited to profit. And I look for debt. If they have debt, I'm discouraged from buying it. If they have, and then I look for revenue. They have revenue and their potential for future revenue is good, then they're a likely prospect to be on my radar for buying. And both NVIDIA and Marvell have had record earnings, and their revenue streams have been fantastic. And I see no signs of that ebbing in the near future. Although the Trump-Musk economy is yet to be determined, but I still think that sector is strong and will continue to be strong for now. And we had a scare from China releasing a little bit of an AI software that everybody panicked about, and the stocks got hit. But the software had nothing to do with the revenue streams of Marvell and NVIDIA. And so obviously the stocks have recovered because people got over the panic, the kind of irrational behavior that's so frequently seen in the markets. The corrections come back when rational thinking resumes.
And irrational exuberance will start to rule them
Yes,
up.
that too.
Remember Greenspan, famous.
Yes.
Yeah, it's quite famous. So investors who want to invest for long term, and what we discussed actually is it is quite practical for many people, not for all, to have two type of portfolios. One is a core portfolio when you may have something that provide a value a year over the years. It's basically, as Milan suggested, it's S&P ETFs, They're quite stable and they have pretty good results. And even when the market goes down, there is a good chance of recovery. Because it represents American economy, and so see, Milan, I've learned a lot from you lately, right? Now, provided that you are doing well and you generate, say, 6 to 10% return on your investment, and you have sizable portfolio, hopefully, you may have also on the side something what we call a fund portfolio. A fund portfolio, it's when you can do more adventuresome investments, maybe buy some stocks. What Jim, for example, mentioned, NVIDIA and Marvel, and there are several other stocks that could provide quite substantial return on investment. And even if you happen to be not very lucky and you may theoretically, I don't see how it's possible with NVIDIA, which generated hundreds of percent return in the last few years. But let's imagine that you didn't pick up NVIDIA or Marvel and you did something else and you lost all your money. Okay, so provided that your fund portfolio is, say, approximately 10% of your core portfolio, so your core portfolio will generate in a year, in the worst case scenario, in 2 years, something what you've lost in a fund portfolio. So you'll be okay. You will not get wounded financially for doing that. However, in a core portfolio beside S&P 500, I don't have S&P 500 my core portfolio, but I do have high yield dividend stocks, which are paying 8-9%. Now, some couple of the stocks went up, so they're paying now less than 9% dividends. They're paying maybe 7.5, still, which is pretty good. And they went up in price, so overall my portfolio went up slightly. But in my case, my fund portfolio generates several times return of my core portfolio, and I understand the necessity of having a core portfolio. I'm very disappointed at my core portfolio. Yeah, I wish I wouldn't have one, but it seems to be that I'm distant to have one, so I still have one. And the only thing is, I don't add any money to my core portfolio. The only thing what I'm doing, I'm taking out dividends. When I feel that I want to go on holiday and I want to fly business class and I want to have 5 stars all inclusive, so I'm taking dividends out of my core portfolio, but I don't touch my the fund portfolio. The only thing I did, only two transactions in my fund portfolio. When I started, I put in 40,000 Canadian dollars. When it reached about $200,000, I removed $40,000 from my portfolio, and that's only two
money.
Yeah, that's right. That's only 2 transactions, cash transactions that I did in my fund. Other than that, I'm trading quite frequently. And thank God, last Monday, so it's more than a week ago, my brokerage house, which is a Questrade, it's based in Toronto, right on Yonge and Finch, they canceled the commissions. There are no commissions anymore. So you can trade you can sell, or buy 1,000 shares of NVIDIA. It's about 140,000 US dollars. Commissions, 0. That's really amazing. I don't see what else you can do in your life and be so profitable as making trading with a Questrade. I just don't see anything. Even if you're some unique professional making $250,000 a year, you can make more in trading stocks with Questrade, provided you're buying the right stocks, of course.
And Charles, Sasha and I have some differences, but we do tend to look at it similarly. And we think in the fund portfolio, it's discretionary money. You can afford to lose it. The core portfolio is there to make sure the preservation of capital and your future is secure.
Yeah, but that's exactly what I said before. The only thing is...
No, I'm agreeing with you. I just wanted to point that out for Charles. Yeah.
Excellent. Yes, Milan.
Oops, Milan, we can't hear you. Milan.
Hello?
Nope.
Uh-oh.
Elon might have to go back out and come back in because he's having some technical problems and all along those lines. So he might have to go out and come back in because I'm not hearing him at all.
Oh,
Lana,
okay.
if you can hear us, we're recommending that you log off and back on. Okay.
Right. That's what we're recommending and everything.
Hey, just
Charles,
really-
what's your opinion on core and fund portfolios, or you just don't feel it comfortable about it? Charles?
We're putting you, Charles,
Sorry,
on the
say
spot.
that again. I thought you were speaking to Mark. I apologize.
Oh no, sorry. I asked you, what do you feel about our talk of core portfolio and fund portfolio, whether you like it or not, and what you're doing with your portfolio? Anything?
Well, I'll start by saying that I'm quite bearish on the markets on a secular basis at the moment. I believe that on many metrics, the market is vastly valued.
Yeah, it is. Yeah.
Of the likes of which
We hear you
the world
fine.
has never seen. I consider myself an amateur economist, which means I don't put much stock in my own judgment. But I do read David Rosenberg, and I've read economists for many decades now. I've taken what I would call an amateur, undertaken an amateur study of ideas in economics. So, I don't want to go on at length, but I think that capital preservation is, of course, essential. I think a dividend strategy is very wise, presuming that the structural characteristics of the market are reliable. So, I have TC Energy, for example, at the moment, and also U.S. Treasury bills, the T-bill ETF, which is paying 4.89% U.S. dollars, which converted to Canadian is a nice, tidy little return, and a nice, safe place to put it. However, even that market seems to be shaky at the moment. Yields rose very sharply several weeks ago. There's a balance sheet reset going on in the United States. They're looking for assets to back up their enormous amount of debt and spending. And that's whether, I don't particularly love Trump, but I think I pride myself that I understand at least what his Treasury Secretary Bessent is doing and what Trump is doing, which is attempting to monetize U.S. federal assets to back the U.S. dollar. So I'm being ultra cautious, in short, Sasha, and I think that's probably wise. I am day trading some positions. I am down slightly. I've had some very strong gains as well. I've been trading Oklo, Archer, TC Energy, and others. I'm in a Euro defense ETF at the moment, and biding my time in that. And then I'm also sometimes using, full disclosure, some instruments designed to short the market, ProShares, SQQQ, which is short the NASDAQ. I could go on at length. I don't want to take all the oxygen in the room, but I'll share one quick story, which is 10 years ago, I participated in a documentary about big data for one of the big broadcasters in Canada here. And I remember being on the campus of Facebook in Palo Alto. We interviewed their head of creative. And I looked around and I thought, it seems very quiet. Where is everybody? And of course, there's offices all over the world and, et cetera. But you realized, my impression for what it's worth, is that the emperor had no clothes. There's no one really driving the bus, so to speak. It's a story that gets told to the market that it's profitable. Now, of course, Meta's just had the biggest 2 or 3 week run in equities history, which is incredible. But I think it highlights that these viral models, these digital models of capitalism, are inherently less stable. So there's the bricks and mortar. I was in Berkshire, for example, for quite a while, and would return to it, except I think it's also a bit high. And Buffett says the same thing. We're at a different time. I'd be 90% Berkshire and then 10% smaller amount on day positions and interesting, new technologies and that sort of thing. So that's me. I'm glad to meet you, gentlemen, and I think this could be a very positive forum.
Well, Charles, may I ask a question? It's you're day trading a little bit, so you think investing is fun. Am I right?
I enjoy investing. I do. I think that when it comes to conceptualizing where the market sees value, I think is an interesting intellectual challenge.
Mm-hmm.
And I also think that there's some things about the economy that will never change, and it's important to understand what those are. I think those are probably best captured by Sasha's dividend portfolio. I hope, anyway. The natural gas market's been fascinating. Let's talk about.
Can you hear me now?
Yes, we can.
Oh, okay. Yeah. Charles, may I say a few words about your position?
Yes.
You're quite right in assuming that the market is greatly overpriced and overrated. And Warren Buffett has a huge amount of cash sitting there.
Yeah.
And Apple has been named, I don't know by whom, as the best run company there is. Apple has enough cash to buy Disney and
Coca-Cola. Coca-Cola.
And Coca-Cola. Apple has enough cash to buy Disney and Coca-Cola. They're waiting for the market to correct itself. Over the last couple of 100 years, the market has returned about 10% not inflation adjusted, about 6% yes inflation adjusted, and it's going to continue doing that. It has been overvalued for a very long time, and when it ultimately crashes, then you will be proven right to do what you're doing now.
Milan, one question quick to you. I know you are always talking about the wisdom of Warren Buffett, and you know, obviously, that he unloaded his major position in Apple. Do you know how much, on average, he generated from selling Apple shares?
Who, Warren Buffett?
Not overall, but per share when he sold Apple shares. How much average price?
Well, a couple of things I'd like to say about that. Warren Buffett, over 50 years, has returned.
No, that's not what I asked you. That's not what. Sorry.
But it's also compounded.
One at a time.
It's a concern.
Then you tell us about his 50 years.
But right now, he's not a young man. I think he's 90. And the company is probably managed by Greg Abel, who happens to be a Canadian and plays hockey every day. But he's going to be the guy who's going to succeed Buffett, probably. And so many of the decisions are made by Greg Abel today. And so,
how do you think he'll do?
Simple answer to simple question. Come on.
Did I not answer it?
You didn't answer my question. I'll repeat it one more time, even two more times. My question is, he unloaded an enormous position of Apple that his company owned a few months ago. And my question was, how much on average per share they netted as a result of that sale?
Well, he's not known for losing. He's not known for losing money. That's for sure.
That's not what I asked, Neil. One more time. Okay, I have a lot of patience.
My answer is that
what did he earn in when he sold his Apple shares?
When he sold his Apple shares, he generated enormous amount of cash for his shares. My question is very simple. What is the average price per share he sold his Apple stock for?
Oh, I don't have that answer, but I tell you.
Okay, I got it.
It's available.
I could saw that coming.
What is the answer, Frank?
I have an answer. Neil, hold on. Let's do one thing at a time. You're just confusing people if you want to start about his 50 years experience and all that stuff, and that his son is playing hockey. You know, the way he plays hockey is all brilliant, but it's not going to put any money on my table. So I will dismiss it. Let him play hockey or volleyball or chess, something else. I don't really care.
May I jump in? I know it's there's a lot at stake here, but I view the current decision about whether to stay long Berkshire as a call about the macro environment in the United States. And that's all on Trump. So it's inherently risky at the moment because of that. And also the other big question is what he's going to do to the US dollar. And he's talked in many forums about wanting to drop the US dollar. And there's even something in some of Bessent's and Stephen Miran, his economist, talk about wanting to raise other currencies as well, that they might sell treasuries and buy Canadian dollar and the euro and other currencies. Trump thinks that the high US dollar is the worst thing for the American public.
It's bad for exporting. Yeah, a low currency helps exports, and Trump is pro-business. He's pro-Trump, of course.
Yeah, pro-Trump,
and that's probably why the market is doing so unusually well. Now, if I may say three things about a fund portfolio: number one, nobody needs one. Number two, make sure that it's small enough that if you lose it all, it doesn't alter your lifestyle. And number three, don't keep records because you're sure to be disappointed. In the short run, you can beat the market, but over the long run, no way are you going to be able to beat the market. Well, that works for you short term, then you're having a lot of fun doing it. Don't do it. You know, I have a friend who has a $10 million portfolio, and he has over 100 stocks in it. And his son-in-law is the president of Starbucks Canada. President of Starbucks Canada earns millions. And he stopped talking to his father-in-law because he's constantly trading. But he says, the $10 million portfolio guy says, I like doing this. I enjoy doing it. So if you enjoy doing, by all means, do so.
I enjoy losing money. Another way to put that.
Enjoys losing money and everything. I had a quick question, and this is actually for Sasha about this whole discussion around the economy and the U.S. economy and everything. Because I had heard earlier today, I think it was earlier today or yesterday, that the new reports came out, and it's actually showing that the economy is not doing all that well and everything like that. And if it was doing better, then Trump would have kind of like taken claim and everything. Because the report came out the way it did, he's now blaming the Biden administration and everything like that. So is this something that you are hearing as well, Jim?
Surprise. Now, under the Biden administration, we saw the record corporate earnings, stock market soared, and whatever, presidents get too much blame and they get too much praise for the economy many times, and so I don't want to get caught up in that, but I'm very concerned about the direction. Sasha and I like to travel, and having a strong U.S. dollar helps when we're abroad. But there is something about the unifying the rest of the world against the United States by using bullying methods like with the tariffs and that sort of thing to try to get them to kowtow to what he wants. It's going to stir up a lot of unity versus the United States. And I see that as a danger. And the import-export situation is definitely vulnerable. And I just see some misery in the future. But, people have been you're going to be right eventually that the market will correct. I mean, wait long enough and it will correct. But I've been hearing recession since the first Trump administration. I've been hearing it every few months that it's bound to happen. It's bound to happen. It's going to happen tomorrow for, years and years now. Yeah, and right. I still don't see any sign of it. And when I do see some signs of a recession, the Trump policies, whatever, I'm hoping for the best, but preparing for the worst. Because I do think
just really quickly, because I had a question for you and everything. Sure. And I was one that, along with Kim, that found you down at that conference and everything along those lines. But I was just wondering, because we talked about on this show, and I think Sasha knows where I'm going, and I have no idea where your stance is on what I'm going to bring up and everything. But where is your stance in terms of crypto and everything? Or do you think that's something that people need to be looking at, or do you not a fan of it? And like I said, I don't know your answer. Sasha doesn't know your answer because I have never asked you this question. So what is your stance on the crypto market as a economy tool?
Who are you asking?
Stop, Charles. Charles.
Are you any of us?
I'm sorry. Would you please reframe that question? I apologize.
No, no problem. I was just asking your stance on crypto because a lot of people are being bullish on crypto, and I just wanted your stance as one that follows the economy and is a amateur, as you put it yourself, in the economy market. So I was just wanting your stance on crypto as a economy too.
I think that it's inherently risky and to be avoided at all costs. However, I do believe that the new administration is giving it some credibility. I saw, for example, that JP Morgan was beginning to consider allowing trade in it under their umbrella. I think that it's a symptom of a hyper-capitalized world. I think that the derivatives market and the black pools of capital that exist in many investment banks and institutions around the world are not well understood by most, and that I think they're inherently inflationary. The derivatives market on a capitalized basis, on a book basis, is worth twice global GDP currently.
Yeah.
Well,
So
I
that's a
think
heck of a lot of risk being traded back and forth. And the Anderson accounting scandal that occurred, I think it was 15 years ago, and they went out of business. They'd taken the contrary position, which is that these were not bookable assets, that you couldn't borrow against them and all the rest of it. Well, the current consensus is that when you've got an option on the books, you can borrow against it to some extent. If and when that ever changes, and it may be that the Trump administration wants to stare that down, I don't know. That will result in the biggest correction in world history. And Bitcoin, in the mix of all of that, I just don't know. People say, there's a limited supply of it. There's only so many Bitcoins. Digital currency will be the thing that the machines use to buy and sell, for example. But that's if we let them. What I do know is this. I do know that they have a huge problem when it comes to defending the treasury market and the US dollar as it currently exists. That's why they're monetizing all these offshore oil assets in the Department of the Interior. It's all this guff about Greenland and all the rest of it. It's because Trump wants to say, look at these assets that back the US dollar. And I want to take the talking stick, for our viewers, there was a key moment in US financial history in 1972. Richard Nixon de-indexed the US dollar from gold. Prior to that, folks could walk up to the gold window and buy gold at a discount, and the American public was actually financing that. So Nixon ended it temporarily. Well, he and Kissinger were brilliant because they went to the Saudis at the time and they said, listen, you denominate all oil sales in the US dollar and we'll guarantee kingdom security. So that's where the bases in Oman and the US presence in the Middle East really became robust. And at that point in time, it became a US dollar, oil-backed US dollar. And that's what we've had in essence for about 30 to 35 years. A lot of the wars and conflicts in the Middle East can be viewed through that lens as an attempt to defend the treasury market and the access to oil. I mean, of course, that's common wisdom, but understand it in the context of what guarantees the value of the US dollar is the buying and selling of oil in that currency. So any country around the world that needed oil from 1972 on had to do it in the US dollar because the biggest swing supplier would only sell in the US dollar. So that brings us to today, which is a massive inflation in the number, the volume of those US dollars on a global basis. And that's to stare down China. That's to try to liquidate China's advantage away. That was the Obama policy for 8 years. Under Obama, the number of US dollars in circulation quadrupled. And now, ever since that time, both Trump 1, Biden, and now Trump 2 are attempting to unwind that. And it's not going to be easy. There's talk about them monetizing the gold in the US Federal Repository. I don't know whether they're going to do that or not, but there's an interesting paper on it that Trump's economist, Stephen Muran, wrote. I could put that up in the chat if anyone wants to see it. So that brings us all back to the crypto. I see crypto as just a symptom of that effect, that macroeconomic massive inflation of currencies. I also think that there's going to be a currency war on for the next years. I think there's going to be massive shifts in currency value, and I think that has to be taken into account by any investor.
Charles, I'm surprised that you didn't mention the $36.5 trillion worth of debt of the United States of America.
Well, that's exactly what I'm describing in essence.
That's the answer to all questions. So Trump's idea is to make a United States a capital of crypto, specifically Bitcoin. So then if everything will be nominated in Bitcoin instead of dollar, and believe me or not, but Trump has no idea what he's talking about, but he has few capable people like Elon Musk and few others who told him, look, forget about US dollars. You will never get rid of the $36.5 trillion worth of debt. Actually, very soon it's going to be $37 trillion. So it's going to go up regardless of what the phenomenal changes Musk is doing to US government and so on.
Starting to talk real money.
Yeah,
once you're talking about $1 trillion, sooner or later you're talking about real money, right?
He is on a course to save $1 trillion from the operations of U.S. government. Guess what? That's never ever gonna happen. It's just 0% chance that he will ever get there, but he will increase the expenditures of U.S. government. Of course, he will prepare tons of new contracts for his companies back and forth. And so this is, you see, Trump is so gullible. He is so naive. He has mind of a 12 years old kid. So this is why people like Musk and others can easily manipulate with him. And I saw the press conference when in the White House when Musk was with his 4 years old kid, and the kid was he was talking to Trump, hey, go away yeah, and so on, and he was dressed like a schlepper, excuse me, and Trump was sitting there looking back and forth, and obviously he didn't understand even 10% of what Musk was talking about. But that's a normal thing. What else can you expect from almost 18-year-old idiot?
Can I reply to that? I honestly think that Trump plays the fool, but knows damn well what he's doing. I think that he has a very clear idea about U.S. Economic and fiscal policy, and has for years. I think there's lots of evidence in Bloomberg and elsewhere where he's talking about the fact he considers the U.S. dollar too high, that he wants to boost exports. And I think that there's an interesting phenomenon at work. And I want to preface my comments by saying I am not defending the regime at all, but I think understanding it is important. And one of his advisors, I forget which it was, I think it was Steve Bannon, who's a terrible individual. But regardless, he said in Trump 1, their administration was about trying to recapture the value of citizenship. What is the value of citizenship? And that's an interesting question. But if you see everything Trump is doing is oriented around boosting the value of that citizenship. It's if you're here illegally, you're leaving. If you're a legal citizen, we're going to defend the economy that employs you, provides you with energy, provides you with access to microchips, semiconductors, etc. So this is the story that they present anyway. Whether or not it's true is something that we all have to.
Charles, I would question the value of United States the citizenship, really, because for people from Canada or Western Europe, the value is zero. There is no value, period, because there is no medicine system.
Well, we need to face the fact we're in a global economy, but we're far from a global community. And unfortunately, what Trump is doing is appealing to the isolationist tendency in the United States, which has been strong for as long as it's been in existence.
And he's calling the build-you on a lot of global political consensus that's captured by the G20, by NATO, etc. And even people that loathe Trump have said, well, he has actually succeeded in getting members of NATO to cough up 2%. He's the first president to ever do it. So all I'm saying is that it's worth understanding what they're attempting to do. And that in essence, it's the renationalization of the US economy. And I think that's a very unstabilizing thing to do in such a globalized world.
Exactly.
And I'll go further in sharing that I sometimes listen to Bill Kristol's podcast, who I find quite interesting. I don't agree with him on everything, but he had a Commerce Department member on, and that person described globalization as inherently chaotic. And they said, what's happened in globalization is that the cracks have been papered over with excess capital. So where globalization failed, they just printed money in the last 20 years. Now that's become unsustainable because the US debt is, as Sasha points out, so massive. I believe that Trump and his economic advisor are well aware of that, and a lot of what they're doing is designed to recapture some of that lost US buying power or reinforce what they have.
How they can do it? What's the way of doing that?
Well, all this nonsense about like allowing exploration in the offshore Alaskan oil reserve, which
but it requires even more cash. All and any exploration. First of all, I've been in life. I've been at exploration projects and so on, so I know a little bit about that. First, to make any money, you have to invest tons of money. Look at how Trump operates. So he's talking, okay, so Palestinians from Gaza, they will be removed in X country. He doesn't name any countries who's willing to take not 2 million Palestinians, but even 20,000 Palestinians. So, and there will be beautiful houses built for them, and each family will get probably, I don't remember, $200,000 to move in and start a new life and so on. And then we will make a next Riviera on shores of Gaza. It's going to be Riviera, the Gaza Riviera. Who is going to invest any money there? Who is going to build that? No, he's talking about US is not going to invest any money, and no US troops will move there. So it's it's like a sick kid dreaming about something. That's what you have. Example of what Trump is talking about. So,
if I may, I would like to talk about the value of U.S. citizenship, and I think that what it means is it's a lot of the ideals about what the U.S. Was founded on, and that includes taking care of the poor, taking care of the needy, and these are the things that I think the Trump administration are going to fail to do. And so it's one of the things that we also wanted to be able to help other countries that were less prosperous. This is another thing that Trump is turning his back on. So these are the types of things that meant a lot to a U.S. citizen. Myself, growing up, thinking that the world was a better place because the U.S. had a democratic, and its idea, it's behind me, freedom was the idea. We were going to inspire people to be free from tyrants, free from dictators, free from people telling them how to behave, what to wear, all of these things. And these are the types of things that we're retreating from rather than embracing. And so the value of the U.S. citizenship goes far beyond its resources.
Yeah, I think that the thing that's not spoken about with the inflation that we've experienced recently is that it's biggest tax there is, right? So the middle class is getting whittled away, and that's the filter I use for looking at any regime, Europe, the UK, Canada, the US. Again, I'm no fan of Trump, but I do think that it's contingent on people that are more moderate than Trump, like us, to grasp what's behind inflation.
You're absolutely right.
Which is the dissolution of the middle class. And
Absolutely.
you allow that to occur, you basically permanently disable the political class in the West as well, and in free countries, whether it's freedom of thought, association, contract. I'm not a free speech absolutist, but I'm someone that thinks you have to have an open society where there's a debate, a marketplace of ideas. And I think that if power continues to concentrate in the hands of very few, that's inherent, that's at risk like never before. So my thing is the middle class has to be defended at all costs. and in the United States, Canada, the UK, Europe, Ukraine, etc., wherever it may be found. No, once the middle class has power, it's very hard to manipulate. And the economy, the finance markets are inherently middle class as well. They were built on the grounds of the post-World War II consensus. That's when all this wealth really got created. What FDR put in place, for example, the reform of the capital markets, and that's a lot of autocracies have been writing blank checks on the promise of that for 20 years. So the inflation we're experiencing is a result of that. So in my opinion, there's no way that there's not going to be a revaluation. A lot of credible people have all said this. So I think that for our viewers, I think it's just a question of how do you manage those risks at this point?
Who benefits from inflation? Who
The
benefits from inflation?
Asset holders.
Borrowers do. They borrow money,
Yes.
and they reach the same dollar value, $1,000, except it buys a lot less. So borrowers benefit for inflation. I'd like to make a comment about Sasha Starr's investing in dividend-paying stocks. There's a group of stocks which are called dividend aristocrats, and they have been paying an increasing dividend every year for over 20 years. And there are investments made up of dividend aristocrats, and they have not been doing as well as holding the American market as a whole, as represented by an exchange-traded fund which tracks the S&P 500. That is, SPY, holding that, has done a better return to investors than dividend aristocrats have, and probably will continue to do that. Yeah.
Well, I think that the income diversity, the separation of wealth has never been greater, and it's accelerating. It's not. So I think that the crunch that the middle class is experiencing is the primary challenge that we're facing today. And I don't know if these policies are going. As I said, I'm hopeful. I'm wait and see. But I don't see the logic behind them helping the middle class. I do see them further concentrating wealth in the hands of the few, and I think it's dangerous. I think it's evil.
Here's how a middle class can help itself. For example, I have sizable position in NVIDIA stock. Say 1,000 shares to make it easier for calculations. NVIDIA has one of the most valuable options when you trade calls or puts for the same matter. They have as much premium as any stock and more. So what I'm doing, for example, in the morning, okay, NVIDIA was up. I sold covered calls, say 10 covered calls, March 21st, generated about $1,000, $10, so $1,000. And then once the stock stabilized and went down slightly, nothing big, say $1 per share went down. So these options now, they don't cost $10 anymore each call. They cost only $9.25, for example. So you can buy back at $9.25 what you sold at 10, and you generate $750 profit. Easy. It takes me about less than half an hour. Okay. Then stock starting its usual trading. Now, as Milan always says, stocks are fluctuating. And I agree 100% with that. So when NVIDIA does rise again, okay, here I am selling another 10 calls at about $9.90, which is close to $10. Then buying back at $8.75 because NVIDIA fluctuated. It went a little bit higher, it went a little bit down. You can actually qualify it as a day trading, but with much obvious results than you would simply buying and selling stock. Because here you are protected, but your position, your long position in NVIDIA stock, you're protecting. You don't care if the options will go high as $15 each or even $20 each. You don't care because you have a core position. You have 1,000 shares. Unfortunately, you will probably have to give up some of your profits. But that's not major thing. Most likely stock will fluctuate. It makes major moves during the night. Normally once it has good futures or so on. So overnight it opens higher. Now during the day nothing will happen to the stock unless they have earnings, but they have earnings on the next week. So obviously there's nothing happened today. It will go higher and down. I did today already 3 transactions back and forth, all profitable. I'm not talking about a lot of money. I made actually less than $2,000, but I have no problem making a couple of $1,000 a day. It will
Start to add up.
yeah, I mean, it adds up. And speaking about dividends, not all dividends are created equal. There are some, I already spoke about it, Jim. Remember ETFs, which are paying dividends at not even once a month, but once every 4 weeks.
Yeah, I bought one of the ones you recommended.
Which one did you buy?
Let's see. I'm going to look it up. Well, I may have bought 2.
I'm writing them down.
CONY and NVDY.
Oh, okay. NVDY reports next week. It will sign dividends. Now, so what I made, there are 4 groups that report each Friday. No, actually, sorry, it pays on Friday. It reports on Wednesday and it pays on Friday. So today was report on one that I have, which is a Tesla ETF paying dividends on covered calls, TSLY. So I have 5,000 shares and they are paying 58 cents a share. So we are talking about roughly slightly over $3,000 US. And it's going to happen every 4th Friday. So some months I will get twice payment, which happened to me with NVDY in January. I got twice dividends because it's a long month and there were like two dividends payments. So NVDY I have 10,000 shares. So whenever it pays, let's say $1 a share to make it simple, we are talking about $10,000 US, and it's every 4 weeks. Milan, hello. Tell us about dividend aristocrats.
In a rising market, the best thing to do is sit back and hold your position and grow rich. Because
depends what's your position. Okay,
it's impossible to beat a rising market by picking stocks.
Impossible,
except perhaps in a short term. Let me ask James: when you pick a stock, who are you buying it from? You're buying it from somebody who's selling it. Now, if the stock
that or a money market manager, yes, it's
okay,
one or the other, yeah.
One or the other, but most people don't know what a money market manager is. So let's say you're buying it for somebody who's selling it. If the stock goes up, the buyer is right, the seller is wrong. If the stock goes down, the buyer is wrong, the seller is right. Can both of you be right? Under certain circumstances, yes, but that's very rare. One of you is right, one of you is wrong. Would you drive a car knowing that you got a 50% chance?
Yeah, but Milan, we've had this discussion before. Like I've sold NVIDIA. I made twice my original investment, which was triggered me to sell. And so NVIDIA kept going up. And so the person who bought it from me was happy, but I was also happy because I had made my investment goal. So I was perfectly happy with that. And I did it with Tesla too. I sold too soon, but I doubled my money. And so that's good enough for me.
A couple of things about that, James. You are a chess grandmaster?
No, just a FIDE master.
Oh, yeah. So now, how many people like you are there out there? There's millions of people playing chess who play chess at your level. The same thing comes to investing. You are a Mozart of investors. The average investor does not market. The average investor is a loser. The average investor does not equal the market. Equaling the market is so simple.
I agree with you, Sasha. For most people, your advice is spot on, and what I would caution them to do. But if you're having fun and you're good at it, why not?
I would have a simple answer to my question. Is this program for losers And are we trying to explain to users what is the right strategy and what they should do?
That's quite a question, Sash.
I didn't get a chance actually to give you a very simple explanation of cryptocurrency. You're all talking about it and the benefits and so on. Rule number 6 in rules-based investing is if you cannot explain something to a 10-year-old, don't get into it. So I cannot explain cryptocurrency. I don't understand it. I don't get into it because I could not explain it to a 10-year-old. That's as simple as that.
It's a wild, wild west out there, and I'm not a gunslinger anymore, so I avoid it too.
A colleague and friend of mine had 40K in a trading fund that specialized in crypto in the UK, and he had it stolen from him by the fund manager when they got fired. There's no recourse. I mean, there's no rules around this stuff.
Exactly. Wild, wild west.
Put on all the accounts and took the money. It's really sad. So it's to be avoided. But it's possible, yes, that they do want to digitize the US dollar or use stablecoin. They may. What I believe they're going to do is they're going to capture the value of Bitcoin and place it inside the US dollar somehow. They're going to say, yeah, we're taking that. You want to trade with the US, you're going to have to convert your Bitcoin into US dollars, and we'll give you US dollars back. Or
what they did with oil.
Exactly.
Yeah.
Yeah.
The digital world has changed the way we live. Anybody involved in the digital world can do things better than they could before that. That includes crooks. And the crooks are now doing better.
I like that, Milan. I'm going to actually quote that. Can I borrow that from you?
Yeah. No accreditation necessary.
Yeah, that's right.
It's Charles's idea now.
Crooks. Digital world hasn't canceled crooks. They're still with us.
Must say that I just finished yet another transaction. I purchased back 10 covered calls, made $460 profit, and now waiting until NVIDIA will come a little bit higher, and I will do the same thing one more
He's
time.
making money while he's hosting a show. That's unbelievable, Sasha.
That's fun.
Yeah.
So you're talking about not having fund portfolio, so not to look at your statements. I do have fund portfolio, and I do look at my fund statements, and I enjoy it every second of it.
I look at it every day.
Star is your last name, but you're not only a star by name, you're also a star in investing. Like James, you're an exceptional investor. You're a Mozart of investing, and that does not apply to the average investor who could equal the market so easily. Simply buy SPY and you got it. That's
right.
all. The average investor, because Wall Street wants us to think that what they do is brain surgery and rocket science, and it isn't. And so very few people like Star are out there, or James E, who are outperforming them.
Well, this is the show for them.
People.
And I call it what Sasha's doing. I don't call it modern investing. I call it hyper modern investing.
Thank you. Thank you. Well, you can call it any name. I wish more people would learn to do something what I'm doing. So maybe even they're not going to be successful at 75% of what I'm doing, but even at 50%, I would be very happy. But what I noticed is that we don't have the complete contact with our listeners. I don't know who they are. I don't know what they think. I don't know what they like or dislike about the show. Really, all I see my co-participants, and I know what they think and what they think, but nothing more than that. So I really cannot make any conclusions about.
We need a feedback loop, Mark.
We have no feedback whatsoever.
How many viewers do we
I'm trying
have?
to do my best. I'm trying to share with people my positions and how I'm trading and what I'm doing. If people don't care about it, okay, there's nothing changed in what I'm doing anyway. But I'm trying to be helpful, but I don't know whether I'm successful or not, really.
And Kim's working on changing that. She's actually putting in a QR code that'll be starting to go on several of these shows where they'll be able to send in questions and communicate with us. Right now, they can do it through the outlets that are out there like Facebook and Twitter and stuff like that, but she is trying to create a system that will encourage people to talk and to dialogue with us on all of the shows. So hopefully that will transpire and we'll get more dialogue with our listeners. So that's what is being created, and that will hopefully create some of that dialogue that not just you, but others are wishing for as well.
Good for you, Tim.
That would be wonderful. Yeah.
That'd be
Yes.
great.
Okay, with that, I would like to thank all participants for today's show. Thank you very much for your contribution. And I will see you next Wednesday, same place, same time. And in the meantime, good luck with your trading.
I want to thank you for inviting Charles Bell.
Yes, thanks. It was great meeting you, Charles.
Great to meet you, James, Sasha, Milan. Thank you very much. Looking forward to it.
Bye-bye.
Hopefully Charles will be back.
Bye, everyone.
Yeah, I will definitely be back. Yeah. Thank you.